So April 2024 might seem like a lifetime away, but there are things you can do now to help save you money on that tax return. Lisa Green Lewis, TurboTax expert and CPA, is with us right now. Look, no one wants to think about this stuff, but it's helpful to get ahead, isn't it?
It's very helpful. Things you do all year long relate to your taxes. So, definitely, I would recommend investing in tax deferred accounts. So, that's like your 401k, because by investing in it, you're lowering your taxable income. And then it's a win, especially if you work for an employer who matches. You're increasing your nest egg and building your retirement and also lowering your taxes.
And actually, I think that's such an important point right there, because so many people sign up when they first get a job and put a percentage in their 401k and then forget about it. Odds are very good you probably could increase it. You can try to hit the max and try to take the maximum. Like you said, it gets your tax bill down. It increases your nest egg in retirement. Also, increasing your nest egg could be that savers credit.
Right. A lot of this is a little known credit. So the IRS, they state that 1 out of 5 people miss this credit. And it's up to $2,000 for married filing jointly and 1,000 if you're single. And it's just a credit you automatically get just for investing in your retirement.
Which is amazing, right? Which, as a reminder, it's 22,500, 30,000 if you're 50 and older in your 401k, and then your IRA. You could still put money in an IRA as well, can't you?
Right. So your IRA, you can invest up to $6,500, and it's 7,500 if you're married filing. I mean, 50 and over, and that is for tax year 2023. And one thing to keep in mind that you can invest in your IRA up to the tax deadline and make an impact on your taxes and lower your taxes. So that's one thing to keep in mind. That is one of the only tax benefits you could get after December for the tax year that you're filing.
Right, because your 401k ends at 12/31. But that's super important. Also, too, I think people should remember to use their health savings accounts. You can use that as a savings vehicle as well, and sock some
Right.
money away. All these things, right, are really good to start to look at this time of year, because it gives you the back half to make some changes.
Exactly. Yeah, your health savings account, you can invest up to $3,850 for for a single plan, and a family plan is $7,750.
So start looking at that. And I suppose also, before I let you go, the last thing you can start looking at too are your gains and losses. If you are an active trader of sorts, maybe you have a lot of gains. Maybe you start looking to harvest losses. People start to do that, once the fall comes around, for sure.
Right. That's another great tip to do by the end of the year. Look at, some of your losing stock, and if you sell them, you'll be able to offset against your capital gains, and then also you'll be able to offset up to $3,000 against ordinary income, like your wages. So that is really helpful. And also, TurboTax, we have TurboTax Taxcaster, which helps you plan before the end of the year. You can put scenarios in, put your different situations in, and see how you can maximize your refund or lower the taxes you owe.
Yeah, that's actually a great tip, especially if you're coming up on a year-end bonus or something. You can manage your tax bill. Lisa Green Lewis, TurboTax expert and CPA. Thank you so much for your insight.
Thank you for having me.